financial argument. Follow us on YouTube.
Now, Richard from Georgia is wanting to know just about U.S. Treasuries. We talked about at the beginning how U.S. Treasuries are being sold off and interest rates are rising just a slight bit, but you're saying a lot less than they should be given how much other countries are selling Treasury bonds. Now, this viewer wants to know the largest derivative holdings by the biggest banks are in interest rate swaps. So what does all this portend for those big banks holding those swaps?
They're going to all fail. It's so simple. It's so simple. Let's just look at Deutsche Bank. That wasn't mentioned in the question, but it's certainly relevant to this picture. Deutsche Bank is the big European bank in deep, deep trouble in multiple fronts, and they've let it be known they hold 75 trillion euros in derivatives. I love telling this one story. There was an analyst, and I think it was called Investment Dynamics, a website. He did an analysis of Lehman Brothers. He did it right around the time they failed. He did it again after the dust cleared and we were very clear on what their toxic, no, not their toxic, all their liquidated assets were worth. Okay, he found out that his conservative method of valuing the books for Lehman Brothers was off by a ratio of 2.5 to 1 because he was conservative. He didn't want to be wrong high. He'd rather be wrong low. So we have something that's at least this bad. He did the same analysis several months ago of Deutsche Bank and arrived at Deutsche Bank's value at minus 400 billion euros. Apply the 2.5 to 1 and you arrive at 1,000 negative euro value for Deutsche Bank's books. So they're worth somewhere between 500 and 1,000 negative euros in the billions. Okay? What's going to happen to them? Well, they get marked to the market, reality strikes, and they get plowed under. This is not complicated. This is not complicated. Any big bank that holds significant derivatives on the interest rate swaps might be forced to endure the reality of seeing the U.S. interest rate moving up toward 5 and 6%, which is historically the norm. What happens to the derivatives if we move from sub 2 to over 5%? They all become worthless. We have these numbers thrown around that it's like 1,400 trillion in derivatives dollars, $1,400 trillion, $1.4 quadrillion of derivatives float around in the Western banking system. What happens when they go worthless? What happens if they just lose, say, half their value? Okay, well, they just lost $350 trillion or more of their value. What happens to the banks? They all get ruined. What's going to happen next, and in the next couple of years, is we're going to see on U.S. soil a lot of foreign banks. And I think more than a few of them will be Chinese. Because the U.S. banks are all broken. You know, here's a very ugly spotlight on QE. The U.S. Fed has been printing money and covering Treasury bonds, whether it's new debt or existing Treasury bonds held by Wall Street. I tend to think that one of the biggest motives, there are two big motives, rather, for QE. One was to cover the U.S. government debt because we couldn't find investors anymore. The second one is to bail out the Wall Street banks that hold too many U.S. Treasuries. They're all going to go pretty much worthless. What was the result of QE and printing all this money to cover the Treasury bonds? It provided the insolvent banks liquidity. It prevented their bankruptcy. QE prevented a string of Lehman Brothers events, Lehman Brothers failures. Why? Because they had liquidity there. They could sell their impaired treasury bonds, and the Fed could promote a rally, rising value, and send some of the money to stocks so Americans remain asleep, like my sister. My sister won't wake up until her stock account is down. Not until then, maybe not even then. I don't know. So QE had a hidden agenda of preventing the failure of all the Wall Street banks, which I include Wells Fargo, the California bank, but maybe another 60 American banks.
Now, this next question is about Deutsche Bank. This viewer is wanting to know, they're saying that you said there was a rumor floating around that China was bidding on Deutsche Bank's gold derivative book. Can you give us an update on this?
Well, this happened about 3 weeks ago, maybe 4 weeks ago. And, well, I mean, the event happened that I'm about to describe. I learned about this about a month ago. I reported on that. That is to be sure. I'm a little disappointed. I thought that when the Chinese came back from their vacation, what was it, 3 or 4 weeks ago? They had their national holiday week to commemorate the establishment of communist China. I thought that they would react with hostility to what was done during their vacation week. Okay, here is what I am told was the setup. Deutsche Bank is desperate for cash. They're insolvent. And when you're insolvent and desperate for cash, you tend to be at the door of bank failure. So they sent out appeals looking for cash. The Chinese heard the appeals and offered them a bunch of cash in return for owning their gold derivative book. Then they went on vacation. Okay, these negotiations weren't just a single day. They were for over several weeks. But they were not signed. The derivative book for gold was not sold from Deutsche Bank, D-Bank. They weren't sold from D-Bank to the Chinese. There was an offer on the table. And the offer on the table would have relieved D-Bank of a tremendous amount of stress. Then the Chinese went on vacation 3 or 4 weeks ago. And during that time, pressure came from Wall Street, I mean the U.S. government handlers, people who give orders to the president and the Congress, who write the laws, enforce the regulations. Word came from the Wall Street bankers that Deutsche Bank was to liquidate a portion of their book, their derivative book, the gold book. And we saw a $100 drop in a matter of 2 or 3 days in the gold price, the official COMEX corrupt price. All right, I thought that in the following week we might have a snapback rally. We did not. What it appears to be is the Chinese are using the opportunity, the situation, to acquire more, even cheaper gold. The Chinese are amazingly patient. We would think, the Westerners would think, well, this has got to happen in the next few months. The Chinese think, no, it'll happen in the next several months, if not a couple of years. If the Americans are dumb enough to discount their gold that they sell us, we are smart enough to keep accepting it and not pressure them to put an end to this. So I thought the Chinese were going to react a little more hostile, in a little more of a hostile way, but they didn't. So not really sure what's going on with respect to the D-Bank gold book. I don't really know, and I'm not afraid to say I don't know. There's a lot going on out there, and if I don't know about this or that, hey, I'm not embarrassed to say so. This is very confusing, very elaborate, very hidden. But one thing's for sure, Deutsche Bank is going down, and the Chinese are going to try to exploit the situation. Let me point out a couple of details regarding the gold book. Okay, it is widely regarded that Deutsche Bank has the counterparty long side to the Wall Street short side. Here's what that means. Okay, we're at a few years ago, we're at 1700 and we're moving down to 1600, and it happens from these illicit, corrupted paper shorts that Wall Street and London banks execute. So let's just say JP Morgan does a huge block of short gold futures contracts, and because of the nature of the futures, there has to be a counterparty on it. And Deutsche Bank took that counterparty long side. So Deutsche Bank was long at 1700. Then they were long again at 1600. Then Deutsche Bank is long again at 1500, and long again at 1400, and long again at 1300. So the gold derivative book accumulated over the years by Deutsche Bank is pretty much all in negative territory. Now, there's another side to this. They roll them over. Most of these gold derivatives, these futures contracts, they roll over. You don't have a 10-year-old futures contract. You have a 1-year-old, 2-year-old, 6-month-old, 3-month-old. They get rolled over. Okay, but I believe Deutsche Bank has some over-the-counter gold derivatives that are much more elaborate and are like custom written and might have an endurance, a duration for more years. But the point is that Deutsche Bank probably has a lot of underwater gold positions. So if they sell to make sure the Chinese don't get them in their hands, they're selling underwater gold position. They're taking losses, and they're aggravating their negative liquidity position. They're aggravating their problems with liquidity, their problems with cash flow. They're draining the Deutsche Bank swamp even faster, hastening their death event or possibility or potential. So the whole exercise of dumping the Deutsche Bank gold book, I believe, badly aggravated the situation for Deutsche Bank with respect to its failure. So they might have kept the gold out of the Chinese hand, the gold derivative book, but they've hastened the risk of a Deutsche Bank failure while they're coming up with these cocoa bonds, which put the bond investors at risk of loss. I know it has an elaborate definition. I can't even remember what cocoa bonds stands for. Collateral is one of the CO. I can't remember. They're raising more money. They're even offering a high bond yield, and they're raising cash. They're making investors some debt securities, and life is going on for Deutsche Bank. So these are idiots who are buying 3% or 4% Deutsche Bank corporate bond. They're idiots. They're going to lose their asses. But, let's just, as I say, let Darwin do his work. Darwin and, natural selection. Get rid of the dummies. Get rid of the ones who don't know how to survive. Get rid of them. Okay, so there's some new investors of Deutsche Bank corporate bonds. Congratulations. Let me know how you're doing in another year. The Qataris, the nation of Qatar, Persian Gulf, the Arabs, the oil, they're LNG experts, big investors. Qatar just backed out of Deutsche Bank. So those 3% bond investors are probably regretting it already in a matter of, a couple weeks. Qatar is backing out because they're not too sure. They have a big $2 billion investment from just 18 or 20 months ago. They lost half their money. So Qatar is angry. This Deutsche Bank ship is going down. Anyone who thinks it's going to turn around and become viable again is nuts. All right, let's move on.
This next viewer is wanting to know what your view is about the future of the UK after Brexit. Okay,
there was a lot of scare tactics put on the table, put in the news a few months ago that Britain would go to hell in a handbasket. I put out in the, I think it was the July and August newsletter that Britain is going to go through a stormy period and come out on the other side with some advantages. Let's just look at one of the advantages. Just one. The lower British pound. It's seen as a horrible development. Really? Would Italy like a cheaper lira to stimulate their economy? That's my comparison. Italy cannot use the discounted currency to stimulate their economy like Britain can. Britain's in a very nice position. They can go out and say, we've got British cars, we've got British consultancies. It's all now 10 to 20% cheaper. Line up. We got contracts ready to sign. This is how stimulus comes. There's another very odd one. They called it the staycation. The staycation. It's stay home for your vacation, the staycation. They didn't go to the Italian, the French, the Portuguese, and the Spanish resort facilities. Why? Because it would have cost 10 and 20% more. They stayed home. Okay, so they noticed that there was a benefit from the absent flow of money out for their own British tourists going to Europe in late summer. It was realized in August. August is a very big vacation month in Europe. It's like an official vacation month. I remember I was on my honeymoon coming down from Switzerland. We went into Turin, Italy, and could not find an open restaurant. Everything was shut down. It was August. So there's a lot more to the Brexit. Let's touch on one of the most difficult points. It has to do with what they call the passport issue. London bankers operating, say, for French and German banks, and a lot more banks, but just think of the many French and German banks that are represented in London, and no longer could they operate without that extra cost of crossing an international boundary. That boundary now has gone back into effect with its inherent cost. Okay, it's called the banker passport. Not really sure how that is all going to play out. I think London is going to lose a rather sizable portion of its financial center activity, but something is likely to take its place because of Brexit, and that is specifically the Chinese, what I call RMB Trading Center. It's also called the Chinese hub, the RMB hub. Think of it as two things. China wants to sell an RMB denominated bond in London to cover, say, the Italian government debt. I'm not talking about the whole debt. I'm just talking about a new block of debt, a new tranche of Italian government debt. It might be, say, $10 billion every month for the Italian government debt for a period of time. They might actually try to roll over some old debt and make it new RMB debt. And China's going to want to do it in London. They're also going to want to do it in Frankfurt, Germany. That's the other big financial hub. They've got an RMB hub already in Frankfurt, Germany. Germans are just into everything that's positive. Okay, the other function of an RMB trading hub beyond bonds is simple currency exchange. Okay, there's a lot of trade between China and Britain, and they need to trade between British pounds and RMB currency, the Chinese yuan. Okay, fine. They want to do that in London. They don't want to do that in Shanghai. They'd like to do it in London. So they're going to the Chinese are going to try to rope in the British with these RMB hub centers. At the same time, during all of this, Russia is not obligated any longer. This is, I think, a very big piece that's not discussed regarding Brexit. They're not obligated in any way in the future of being bound by the EU Commission regarding the Russian sanctions. So, on a case-by-case basis, evaluate the merits, and they might do, say, an energy deal with the Russians, a pipeline supply deal, because the North Sea, this is another part of the British economy, UK economy, that's not discussed much. But they've got something like an 80 or 90% decline in the North Sea oil and gas output compared to, say, 1980, when it was really going great guns. So Britain is going to lose a portion of its financial sector because of Brexit, while it lost a significant portion, the majority portion, of its energy income. And they need to import energy, so I think one reason they got out of the EU was so they could import Russian oil and gas. Look for a nice big project soon in Britain of an LNG facility to take Russian gas. It's a little more expensive, but it's a lot more volume. So the Brexit is going to be, I think, pretty much what I said back in July and August. It's going to be a shockwave, an adjustment, and then they're going to be moving forward, but in a more international role, not obstructed by sanctions, not obstructed by, say, the growing U.S.-Chinese trade war, which is one of the most unique phenomena in human history because the U.S. has tremendous trade dependence, supply dependence for finished products on China while we're having the trade war, while China owns, say, $3 trillion or $2 trillion worth of treasury bonds. They own a lot more than they admit. I mean, don't write to me and contact us and say, oh no, Chinese are down to $1.0 trillion, same as Japan, in treasury bond ownership. Well, yeah, that's their official, but it does not include SAFE. SAFE is their sovereign wealth fund. Does not include a lot of things. Doesn't include private holdings. SAFE is State Administration Foreign Exchange, SAFE. Doesn't include the CIC, the Chinese Investment Corporation. These are their private, not private, these are their quasi-official reserve holdings, sovereign wealth funds. They also, I think, hold a lot of gold. That's not counted in the official silly statement of gold ownership. So I think Brexit is going to be okay for Britain. I've heard some stories that they wanted out of the European Union so they could become a very important cog, wheel, center for the Eurasian trade zone that the U.S. so vigorously has been opposing. And when I read that and I swallow it and digest it and think about it, I come up with only one conclusion. The big tie, the big link that has existed for well over 100 years between the United States and Britain, it might be going away. The British might become very important agents for trade on the financial side for the Eurasian trade zone that the U.S. has been blocking, like with their efforts of scorched earth with respect to Ukraine. If Britain becomes a big agent for the Eurasian trade zone, it goes exactly against the entire Ukraine war on its hidden agenda. So I think Washington's got some very severe isolation issues coming up, Elijah, and it's going to get weird, going to get nasty.
Now, moving forward here, this viewer is wanting to know about Central America, and they're saying that, a lot of expatriates live in Central America, and there's also a lot of construction going on. This viewer thinks it's a bubble because you can see lots of less than half-filled condo towers, and they're wanting to know when the U.S. falls, What do you see happening to the expatriates in Central America?
Okay, I live in Central America. I'm in Costa Rica. I follow what's going on in Costa Rica. I follow what's going on in Nicaragua. And I follow as best I can, and not perfectly, the events in Panama. What I have noticed is, yes, there's a construction boom. You don't have to look very hard in San Jose, Costa Rica, where I live, to see the construction boom. Just down the road, not even a mile from me, is a 25-story tower that's going to be for condominiums. In the town center is a twin tower of 40 stories. And what I'm told is they're not even half full. The one that's just under a mile away, it's not completed yet. They're still avidly working the construction. You see a lot of cement facades. Okay, here is what I have learned regarding Costa Rica, and then I'll address the other countries. They are almost exclusively Chinese projects. So what are they doing? I think they're converting their dollars into a hard asset of a commercial building. Will it go empty for a while? Well, maybe. Would that mean they lose some money? Well, maybe. Would they lose money in the treasury bills if they're in a debt restructure? Definitely. Would they lose money in the treasury bonds if there's a devaluation? Don't really know, because I think when the $2 come, there'll be an international dollar and there'll be a domestic dollar. And the treasury shice dollar, as I call it, the rainbow dollar with the multicolored new bills, that is not going to be the international dollar. The story I'm hearing is that the international dollar will continue, and the U.S. government will lose its oversight and control of the international dollar. So the Chinese own international dollars. They're trying to convert to hard assets. Not just in San Jose, Costa Rica. They're buying lots and lots of properties across Africa. They're buying port facilities in Africa. They're buying mines in Africa. They're doing projects for oil delivery facilities in Africa, like Nigeria. They're doing a lot of big package deals in Africa where it's not just oil delivery and facilities for that, but it's community centers, schools, and hospitals and railroads. In other words, developing the infrastructure for those African nations. The U.S. goes in and sells weapons and assassinates leaders and enforces vaccinations that kill people. And Chinese don't do that. They go in and try to establish commercial ties and invest in the country and in their infrastructure that helps develop the economy. All right, so the Chinese, okay, when it comes to Costa Rica, I don't know of any large-scale projects that are outside Chinese control. I don't know one, not one. So if there's a construction bubble, it's a Chinese issue. Okay, what's going on in Nicaragua? Well, they've got this supposed canal, a wider canal. I don't want to get into a long discussion of the Nicaraguan canal to compete with the U.S.-controlled Panama Canal. It's funny, the Panama Canal is controlled by the U.S. on its movement, but it's pretty much operated by the Chinese. I don't want to get into a long discussion. I tend to think that the Panama Canal is really about narcotics from the U.S. government, Langley, and the Chinese don't want that stranglehold, so they're talking about a Nicaraguan canal. And let me just point out a couple major things regarding the Nicaraguan canal. I follow on my group of colleagues. I have a colleague in my group who's a rather good friend, smart fellow. And he did an analysis close to a year ago of the Nicaraguan Canal project. And he said, Jim, from the highest point to the lowest, it's 1,000 feet. That means it's going to need something like 200 locks. That means it's going to need a lot of native river water to manage the lock system. That means it's going to be shut down every 6 months due to silt and sand buildup. So if they complete the canal, they're going to need to build 200 locks, and it's going to have to be shut down half the time. And I said, I don't think this canal is ever going to happen, do you? And he said, I don't think so, not really. Not unless they overcome some huge obstacles. And then he hit me with the zinger. If they build the canal, they're going to have to clear a lot of jungle. So he estimated that somewhere like $2 to $3 billion of hardwood lumber would be the booty from the construction project. And it would probably go to the Ortega Sandinista government, private hands. The dummies who read such a thing would say, well, gosh, that'll go right into the Nicaraguan government registry or treasury and help them out with their deficits and relieve their currency problems and maybe be distributed across the country. Yeah, what stupidity. It'll go into 6 or 8 private hands, and the public will never see a freaking dime of that. Okay, so it could be that the Chinese told the Nicaraguans, we really want the naval base on the Caribbean, or Atlantic side. It's really not Caribbean, it's way south of the Caribbean. We want the Atlantic naval base, and we want the Pacific naval base, and we're going to cut down a lot of trees and deliver your booty of a couple $2 billion worth of hardwood just to let us proceed. And that's what I think is going on. The canal will never be built. Okay, as for Panama, it is a completely different world. Absolutely different world. Whereas Nicaragua has great difficulties and obstacles for capital formation, Panama has ample, easy opportunity for capital formation, huge international investment. They have the canal, and they've got a tremendous amount of narco money of both the U.S. type and South American type flowing through into their banking system. But they've got some overexpansion in Panama City. I don't know how it's going to turn out regarding the broken bubbles for construction. I'm not really concerned about the broken bubbles of construction. I'm concerned about the overpopulation issues. They brought in, just in 2015, they brought in 180,000 Venezuelans escaping from their completely wrecked country. 180,000 Venezuelans, and many of them, maybe the majority, went to Panama City. They've got horrendous traffic problems. They just completed an underground subway system, urban subway. Think of it as an underground train. They completed an overground monorail system. They still have the traffic problems. They offered fast-track permanent residence, 30 days, but very tough requirements. And one of them is you set up a corporation and you seed it with $5,000. So they're trying to attract money, but they're also attracting not much, but some riffraff. Okay, I don't really have a whole lot more to say about the bubble and expats, but people who are outside the United States right now, if they are able to have continued access for their wealth, their savings, their accounts, and just deal properly with all the new financial regulations that are on the books, they're going to be in much better condition because most of these Latin American countries are rather self-sufficient. In Costa Rica here, we're almost completely self-sufficient with food. We're not self-sufficient at all with gasoline and diesel and car parts. There's no car manufacturing in Costa Rica. They do have certain parts like tires. There's a big Bridgestone, which is a Japanese company, the big Bridgestone tire plant. Okay, well, they make some tires, big deal. I doubt it's even 15 to 20% of They imported tires for Costa Rica. The shock waves are going to be brutal inside the United States. And I think the American press is going to probably emphasize the difficulties for expats outside in order to distract the attention for those inside.
All right. Well, Jim, Willie, thank you so much for joining us today. Before we let you go, where can our viewers find you online?
The website started 12 and a half years ago. This month was issue number 151. Wow. I remember I came here in December of 2006, and it was about 2.5 years into the newsletter, a little over 30 issues. So I've been here a long time, almost 10 years. The website is www.goldenjackass.com. This month was unusual, and it was because I think of the frozen situation, suspended animation, tremendous attention on the politics and war threat. There really wasn't a lot of activity going on, and I almost had just one report, but instead I divided it up and made two rather, well, they're about 2/3 the regular size. So the two reports are these. It's the Global Money War Report, which is really the international battle worldwide, globally, to defend the dollar. The Ukraine war and the Syrian war are to defend the dollar. That's not how it's described. It's to stop the Russian aggression. That's absolute nonsense. It's to interrupt the Gazprom pipeline from Russia to Europe and make it so Europe doesn't have an energy dependence on Russia. Then the Syrian pipeline Syria war also has an energy component. The U.S. does not want any completed pipeline for the Iran gas. It's called the Iranian gas pipeline. It's interrupted. Why? Because there's a war. Scorch earth, wreck the country, create a lot of refugees, and interrupt the dependence, potentially, for the European energy supply from Iran, just like they interrupted from Russia. So that's the Global Money War Report. It's a lot more than war. It's about central bank policy, QE, the hypermonetary inflation, the bank insolvencies, a lot of different things. But the second report is a little more detail at the ground level, like it's called the Golden Currency Report. And it's a lot more ground level, like actual mint coin demand, actual Indian imported gold demand, policy changes for India. I include Russian developments and Chinese developments, both the war that's heating up with Russia and the trade war that's been in effect for 10 years with respect to China. Russia and China issues and oil issues are all in the gold and silver, the Golden Currency Report. Oil issues related to the death of the petrodollar de facto standard, that's in the Golden Currency Report. So been a labor of love, Elijah, 12 and a half years. I recharge my jets in the couple weeks and that I'm not writing actively for the newsletter and reports. They were just posted on the 21st, which was last Friday, the October reports. And I enjoy this work tremendously. I kind of miss the marketing research and statistical analysis, model building, and hypothesis testing, and deep stuff analysis. I miss it, but I'm doing something very important now, and I don't regret it at all. This is far more important than computer industry marketing research. I'm learning a lot. It seems like every 2 or 3 months I have to learn about something important. A few months ago I had to learn what the reverse repo was because the December interest rate hike was pretty much a false story. I had to learn what that was really about. It was to enable greater leverage from the Wall Street banks. Rob Kirby has been very helpful whenever I have to learn something. I say, Rob, I need to learn something. Can you help me out? And he said, sure, what? So a few years ago it was about what the derivatives were. Now it's about what reverse repo is. And I built a good staff. They're not subject to me. They're more like my colleagues with a lot of respect mutually handed. It's 9 or 10 people. They're all men. Half of them are Americans. Half of them are not. And we get along very well. Every once in a while, one goes out and one comes in. Had 2 new additions in the last, 3 years. And they're important additions. They do significant contributions. So sometimes when I have a forecast, Elijah, it's a little funny. It's not mine. It's from a colleague. And he doesn't say to me, hey, Jim, you can take it as your own. No, I'll say, this is a hat trick letter forecast, and it's compliments of Euroraj. Or this is a forecast that the Voice has explained to me on how it might unfold. And I'm the messenger. I'm the analyst. I'm the writer. I deliver it. So it's a very interesting dynamic for producing the reports. It's a team effort sometimes. I'll ask someone, can you just put together a bunch of notes on this, and I'll try to write it up. But can you give me a synopsis on what you think is going on with respect, say, to Iran and the Eurasian trade zone? That was something Euroraj did a month ago. I think it was the September report. So the 2 reports, and it's 6-month subscriptions, and I hope people can go to the website and look at the free material and eventually sign up for the Hat Trick newsletter. It's I think, very spellbinding now. And I always mention the 2 compliments I receive. One type is, I've been listening to your podcasts and interviews and reading your public articles, and I thought that was enough, but I finally thought I'd sign up. And some would say, to give you a reward for good hard work, and I wish I'd signed up 2 years ago. And the other is, I used to be a Hat Trick letter subscriber in 08, 9, 10, 11, and I just went away, and I wish I'd never left. I'm back now. So it's nice compliments. And what I'm starting to get now is people sign up and say, I'm one of those guys who just listened to your podcast for free. And man, this is really interesting stuff. I should have done this a year ago. I should have signed up. And I get other people say, I left for 3 years and I bounced around, and I came back because your work is better than the ones that I was checking out. So good comparisons, good compliments, and I don't say it's a lot of fun. I'd say it's a lot of stimulus. And I get into arguments with my father. I say, Dad, these forecasts are coming true, and they're miserable, hardship forecasts. And I don't enjoy the outcome. I enjoy the fact that I do good work. And my father says, yeah, Jim, I really think you enjoy the U.S. is going down. No, I enjoy that the U.S. cabal is going down, but he doesn't distinguish between the cabal and the government, and he flies his flag. I said, well, I want to get rid of those who captured the flag. And he said, I don't think anyone captured the flag. We're all Americans. So therein lies the conflict, and I don't think it's going to become clear until 9/11 is revealed. I really don't think it's going to be made clear until then. And maybe it won't even be too clear even after then. So anyway, well, thanks for having me on. It's, gosh, it's been 2 hours. I didn't expect to be 2 hours, but that's okay. I know I'm a blabbermouth, so thanks for having me on, Elijah, and congratulations for being part of Silver Doctors. I think it's a feather in your cap.
Thanks so much, Jim.